Welcome to Stock Market Daily News. It's Tuesday, April 1st, 2026. Here's your quick recap of what happened in the markets on Monday, March 31st. Wall Street ended March on a cautious note. The S&P 500 fell 0.4%, closing at 6,344. The Dow inched up just under 50 points to finish at 45,216. And the Nasdaq slid 0.7% to end at 20,795. Geopolitical jitters, softer tech stocks, and volatile oil prices kept investors on high alert. But we'll also cover major headlines, a historic plunge in Gulf markets, a fresh round of Oracle layoffs, and big changes coming to your retirement plans. Let's break down the 5 most important market stories. First up, Middle East tensions are hitting global markets hard. Since the U.S.-Israel war on Iran began on February 28, Dubai and Abu Dhabi stock markets have lost an eye-watering $120 billion in value. Dubai's index has plunged 16%, while Abu Dhabi is down 9%. The reasons: thousands of canceled flights, tourism hits, and investors fleeing risk. While some see this as a short-term shock, the losses are among the largest worldwide this year. That means volatility could persist until there's clearer progress toward a peace deal. Second, tech stocks remain under pressure. The semiconductor index dropped more than 4% on Monday. The Fidelity Blue Chip Growth ETF, with heavy exposure to mega caps like Nvidia and Apple, is down almost 12% for the year, outpacing even the Nasdaq's 8% slide. Higher Treasury yields and concerns over U.S. chip export controls to China are weighing on expectations. For growth-focused investors, the takeaway is clear: watch for stabilization in bond markets and trade policy for signs of a turnaround. Third, in the headlines, Oracle has begun a new round of global layoffs. Tech layoffs are hitting every corner, and Oracle's cuts follow on the heels of recent job reductions at Amazon and Meta. This move comes as Oracle tries to curb costs and fund a massive AI data center expansion, even after its stock lost nearly 30% year-to-date. The broader message? Even major cloud and software firms face difficult choices as AI spending accelerates and traditional software demand slows. Fourth story: your 401k is about to get new options and new risks. The Department of Labor just issued guidelines allowing retirement plans to invest more easily in crypto and private equity, as sought by President Trump. Supporters say this could democratize investing, but critics warn it exposes retirement savings to volatile and illiquid assets. Asset managers like Blackstone and KKR rallied on the news, with Blackstone up 3.3%. For retirement investors, diversification is key, but so is careful risk management. And finally, the war premium in energy and inflation trade. Oil briefly soared above $100 a barrel before settling just under $103. The S&P energy sector slipped despite the price spike, and financials bucked the trend, climbing over 1% as investors rotated into value over growth. Big moves like these mean that inflation expectations and Fed policy will remain the central focus in coming weeks. Let's recap. S&P 500 down 0.4%, Nasdaq off by 0.7%, and the Dow barely in the green. The key themes: geopolitical risks, persistent tech weakness, shifting retirement policy, and ongoing sector rotation, are likely to drive early April's market mood. Investors should watch out for upcoming Fed statements, jobs data, and the start of Q1 earnings season. That's your 2-minute roundup from Stock Market Daily News. For more insights, be sure to subscribe and follow us for your daily market fix.